Welcome to TradeTheNBI.com. This is John. This report is for the 26th. What a nice range day. We knew that the support would not hold when selling began, given what we were seeing from the readings. And it's fine. They cleared out call options, wiped out put options who acquired on the breakdown below, fed it back up, got excited again, but then closed deck lower. Now we're seeing the gap up here, and it's going to wipe out any additional puts that were put into place. Will it be enough to sustain a move? That becomes bigger question. Still a rising short interest within the setup, but NBI Magenta leading pretty strong within this overall configuration. Again, it makes it tough, though, to pass that 50% mark, given what we're seeing at this particular stage. But, you had some, negative earnings situations and a little bit of surprises and some weak guidances going forward. And that is a result of, continued inflationary pressures, and none of that's changed. From an NQ standpoint, we had this deep dive of the DOC here going into that pretty extreme area, but the drop of the orange perfectly on track. The move of the steel above the 13.5 was the impetus for, added bonus to the upside, but we knew that a move underneath it would cause weakness, and that's exactly what happened and why things got so erratic, because there just wasn't enough pickup from midterm and long-term buyers until later on, once there was enough depth into that destruction before they jumped back into it. And now you can see they're propelling that, and that's gonna, in this case, we're moving the DOC green over cyan. So that's a continued positive mode for bulls, at least in that particular configuration. Treasuries starting to get more attractive to people as that yield continues to rise. And I mean, look at this. You filled the back. Oh, everything going back through here. So again, the algorithm knew the spike, faked out all these people to, think that the Fed was going to go to zero. And that's a bloodbath for all those people who bought all those treasuries at yields far below inflation and far below what the current is. So they're all taking haircuts, which is really a problem that most people don't understand about banks that have all bought a lot of U.S. treasuries. They are way underwater, and they've allowed them not to have to mark that losses, because if they did, most banks would be insolvent at this particular stage. Oil continuing its creep up, and that is going to be the ultimate determiner, I think, of where things go and how much growth really gets wiped out. People are so excited about the growth in the EU, but again, as oil prices rise and that inflation continues to bite into things, it's only going to fade. I mean, it was modest. I mean, tenths of a percent growth, but relative to what they see from the U.S. From a GDP print, it was very exciting. So that was enough to give them the impetus to, let's jump into euros. What an exciting move. And of course, the GDP print for America is just a reflection of the fact that inflation is going to continue to erode the ability for growth. You take out government spending and you'd be seriously negative. So factor that one into your thought process, because if there's any slowdown in government spending, GDP is going to be negative really fast. And gold continuing its turnaround, and it's not going to be stoppable, given what we see from the scenarios that are building. Continue to look for it to continue to climb. That also should put upside pressure for your Bitcoins and that. I know there was talk about ETH not getting their ETF approved. That's going to be a headwind going there relative. I mean, they think that these ETFs are going to create some demand that's going to push things. And we can already see that bloom is, already faded and the petals are off. From a 50K standpoint, it was pretty nice, because you ended up with magenta moving over the white here below the 23%. Once it got above the 23%, it was clearly above white at that particular point. So now you got strong short interest with bulls overtaking them, and well, that creates always the same situation. Short cover rally that continues to boost, strong spike here, way up, and then shorts basically forced to cover, and that's the big jump right through there. All on positive extremes at this particular stage. So you can look for a return back to that 50.81 when the time is right, not yet. Early on, we saw the nice sell that took place pre-market. As the market opened, things started to firm up after all of that negative news of earnings and that were melded into the situation, and then it was just a straight climb before seeing that short cover, a few little peaks, and then post market really took off again there. And we can see that's continued here into the aftermarket, relatively muted. We get some fade back into it, been a little active, and you can see a little bit of a pullback down into here to fill in some of that excess, but still overall, you're plus 36 in the pre-market before the open, and that not bad. As always, though, anything relevant, I will certainly put it on the Skype chat. Have a good one. Trade well.